there's still so much uncertainty, and we saw Singapore's GDP contracting much more than expected, slumping more than 40% annualized. Given all the uncertainties, I mean, is OCBC strong enough to withstand perhaps a prolonged crisis?
Good to talk to you, Asinda. Happy to be on the show. Absolutely. If you look at what we did in the second quarter and in the first half of this year, we have significantly strengthened our balance sheet. First of all, our operating performance was satisfactory. Quarter-on-quarter basis, year-on-year basis, we all see improvement. But these are before allowances. What we decided to do is to create a significantly higher amount of allowances to shore up our balance sheet to prepare for the uncertain future. So in a way, we look at what is expected in our portfolio development. We also, beyond that, we also added additional provisions to cushion for the uncertain future, particularly when the relief programs all around the region come to an end, and we want to prepare for that.
We had the Monetary Authority of Singapore singling out OCBC and its units for keeping jobs, giving people the job still despite the challenging times right now. Can you continue to do that, especially with, stimulus from the government coming to an end very soon?
I think it is important for major institutions like ourselves in each of the countries that we operate to do as much as possible to protect the jobs. Now, having said that, we have to look for other areas of which we do disciplined cost management. So this would include our other discretionary spending, as well as other expenses relating to management compensation. We're also looking at that. So protecting the job is very important, and we are working with the government on that. There are some schemes of which we participate with the government, and we are able to offer continued job opportunities to the people. And this will be a fairly important factor to make sure that the economy will be able to recover post-COVID.
Sam, we have seen OCBC take a tougher stance when it comes to the oil and gas loan restructuring. Why is that?
We look at the near-term future of the oil and gas industry, and we notice that as a result of the lockdown in major economies, the demand for fuel oil has really decreased. So as a result of that, we felt that the customers who are in this sector, particularly what we call the OSV sector, which is the offshore support vessel sector, will probably had a hard time in terms of getting contracts renewed at an acceptable rate, or sometimes even get the vessels employed. So whereas there is no significant deterioration that we saw in the second quarter yet, on a forward-looking basis, our feeling is that it is likely to have their cash flow reduced. So we want to take a preempting step, as I said, to prepare for the future development in this industry. So we took a significant provision and write down the portfolio in that sector. So if the market turns out to be as what we had expected, we've already done it. If the market turns out to be better than what we expected, then we will have some recoveries in that sector.
There's some suggestion from some analysts that OCBC was the slowest in cleaning up bad debt from the 2015, 2016 piles. Are you concerned that perhaps it will happen again this time round, given your exposure?
Well, first of all, I don't think that we are slow in recognition this. The issue is that when we look at the industry, we had some expectation of what the industry is going to perform. Now, because of this COVID, there was an abrupt reduction in demand in fuel oil. And therefore, it is likely that the vessels deployed in this sector will be impacted. So we take a preemptive view to take the action to write down. Now, the remaining OSV exposure in our portfolio is now less than 0.3%. So I think this issue is really behind us.
Sam, Rich in Hong Kong here, and I've got to talk to you about Hong Kong here with what's been happening. Are you seeing any client flows or new accounts being opened because people are trying to get their money out of the territory?
We do not see that. There are some inquiries, but we do not see the dollar flow.
All right, so the thing is, how do you deal then with this crossfire that's taking place between Beijing and Washington for the time being, and also the people who've been put on the sanctions list?
Well, from our perspective, we are involved in the underlying real economy activities. And the real economy activities is now slower in Hong Kong, but we continue to feel that Hong Kong is an offshore platform for China going forward. So we will continue to be involved in the real economy underlying business of the territory.
Sam, tell me, during the lockdown and the so-called circuit breaker there in Singapore, have you noticed that people are saving more?
People are not spending. So as a result of that, the activities in the Singapore economy has really come down. The savings rate in Singapore has always been very high. And some of them, because of the reduced economic activities, they're dipping into their savings to keep their lives going. I do not really see saving for saving's sake, but it was because their spending has reduced. So as a result of that, they've got more cushion to face the future.
All right, Sam, I want to just move and talk to you about what's going on with the digital economy and virtual banks there in Singapore and other parts of the region here as well. And how does it fit now with your branch network? You're having a virtual bank. Does it make some of those branches redundant? Do you plan any closures, etc.?
I think the banking model will change. We have invested, as you know, quite a bit into digitalization. And in a way, we are pleased that this crisis really forced the people to use the digital channel, of which we've been preparing for their usage for quite some time. And we see active utilization. So in a way, we are able to derive benefit, more benefit than we originally expected from the investments that we have made. Going forward, some of these behaviors will continue, so the demand on counter services at the branches would be reduced. In that sense, therefore, we can convert the branch model into more of a customer interaction, customer financial advisory type of model. And that, I think, is a right way to develop the financial services industry going forward. As you know, open banking is also coming into Singapore, and this will even facilitate more financial advisory type of activities to take place at the branches. So we can make use of the space that is now available for counter service to make them available for the future services that we will extend to them. So it is a move in that direction, and we are able to capitalize on it because of the digitalization investments that we've made in the past.
Tell me about Southeast Asia. I mean, you are the second biggest operator, of course, in that part of the world. Where are you seeing strength? Where are you seeing weakness in your business there?
Well, I think the near-term concern is when the relief program is exited. How can we make sure that the exit is orderly, and we will continue to have the discipline of the people to honor their original repayments, despite the market is weakened? So we are working with the regulators all around the region to make sure that the exit is orderly. We will continue to extend some accommodation to those customers under stress, but the majority of the customers, we do expect them to be able to revert gradually to their normal repayment schedule. But I just want to add that even though we have about 10% of our portfolio, which is under the moratorium, 88% of our portfolio under the moratorium is actually fully secured. It's usually secured by their houses, by their homes. And so in that respect, the first and the secondary source of repayment should be able to tide them over. And we are still working with the regulators to make sure it's orderly. So that's the near-term concern. The longer-term concern is that because of this COVID, I think some of the industries need to be not restructured, but reinvented. And therefore, we really need to work with the customers on the reinvention to see what they need to bring them to the next phase of demand, next phase of development. So this is the medium-term challenge beyond the near term.
Sam, there's a lot of speculation about your successor. I mean this in the most respectful way. Are there plans to step down? And going forward, what do you deem as the biggest challenges for the bank?
I think we always need to look beyond the immediate crisis. Now, everybody's talking about COVID-19, but COVID-19 is going to end at some point in time. We don't know exactly when, with or without the vaccine. We need to eliminate the fear related to COVID-19. So we need to look beyond that. As we position the bank, we need to look into how is the rebalancing of the economy is going to happen? what are the industries that is likely to have more in demand. So in OCBC's case, we look at sustainability-related projects. I think we'll have a higher demand than before. We need to look at how the companies reinvent themselves. It could be consolidation, it could be privatization. Those are the efforts that we will be involved in. And I don't want to underestimate wealth management. As you know, we are very successful in wealth management, and we will continue to build our strength in wealth management, both in scope and in scale. And that continues to be an attraction for the bank. It's going to create that diversity that is required for any banking operation. So in addition to commercial lending, commercial deposit taking, wealth management and insurance is what we're going to focus on.